The following was recorded in front of a live studio audience at the Studio 21 Podcast Café. This is the United Podcast Network.
Welcome to the Stock Market Authority podcast. I'm Bakes, Kevin Baker. I'm going to teach you how to make money in up and down markets. Very few podcasters or coaches cover this. I'll show you how to lock in profits and minimize losses to make you a better investor. So once a week, you're going to know what's going on in the world and the stock market. Welcome to the Stock Market Authority podcast. Good morning, everybody. This is Bakes, Kevin Baker, Stock Market Authority. Wednesday the 14th. I can't believe how this year is flying by. We're going to talk about today, Bakes is going nuclear again. I don't normally talk in the third person, but I thought it kind of worked, so I decided that was going to be the tagline today. So uranium is going north. That's the bottom line here. The mailbag, open that up, and we'll talk about Schlumberger and Palo Alto and Lowe's, and we'll go through the portfolio, the Stock Market Authority portfolio, where I show you what I do outside of the S&P 500 in the retirement account. I try to find the 10 best ETFs here to make money this year like we did last year when everybody else lost money. But look, today's top story. We're buying uranium again, URNJ. This is the spot uranium junior miners ETF. For long-term viewers and listeners, we're back. And as you know, I'll talk about the history in a future chart. But this is what I saw, and this is what you asked me to do, and I really enjoy it. At the turn of the month, I go through 2,000 charts, and I look for things like this. And this is absolute textbook, and I love this because uranium is a quirky asset that most people don't talk about, don't think about, and it's not in the S&P 500 in any great way. It's a very small market, and so for individual investors like us, I just like it. This is the junior miners, so it doesn't have Cameco in it. CCJ is sort of the big uranium company that the institutions pull off the shelf to have some exposure here, and not many of them are doing that either. We bought this yesterday, literally, maybe 2 days ago now, based on what I see here. I see a new intermediate high, big volume, and this is just what my eye is trained to look for. Cheapness with positive change. And we'll talk about this briefly. Fukushima was a Japanese nuclear plant that in 2011 was swamped by a typhoon. No one died from radiation, but it did what you would think it would do. It put the Japanese nuclear industry on hold. Germany followed suit, and demand for the metal absolutely collapsed while people were petrified by this. And the cure for lower price for high prices in commodities is high prices, and the same is true for low prices. So it's taken 12 years to get to this point where the utilities that use this to feed their nuclear plants and produce power, the supplies have gone down. And so we went from I'll talk about the spot later. We hit a high here of $23 in the junior miners index, came down to a low recently, and now we're picking it up at $17, $18. And I'm very enthusiastic about this. These tend to be very, very long-term trends that are hard to alter. So I'm back in the game, and let's go to the spot chart just to give you some historical perspective. This is going back to 1990, and what you see here is I think this is inning 3, maybe inning 4 of this bull market. Spent decades under $20, and then in 05, 06, 07, you see the spike here as demand absolutely skyrocketed to a high of $140. Okay, and that The high prices cure that, and so the supply comes on, and then Fukushima happens in 2011. You see that little move there, and then the price collapsed from 75 down to 18, I think was the COVID low. This is the spot price of the actual metal itself. And so what happens here is obviously the miners, especially these smaller miners, the revenues go up, expenses stay roughly the same, margins expand, and the earnings explode to the downside. And then people say that look at this earnings growth that is coming here, and this is a very, very small market. I mean, it is tiny compared to oil or SaaS companies or certainly AI. And so if the hedge funds and the institutions start to say, hey, I see a breakout on this chart coming, which is what I think I see. We move from 45, here we are at 55. You get a 6 in front of that, and you start taking this out. And then I think we march higher to probably challenge that 140 high. And I know that sounds audacious, but this is what the history suggests. And when you have 12 years of mines closing and supply constraints and utilities using this fuel, you're going to have to buy uranium to power nuclear plants going forward. I think it's being more accepted. I think it fits into climate change goals, and there's a lot of new technologies that are even smaller and safer than the old nuclear plants that Homer Simpson tells you about. I think it's just time. It's green. It's ESG. It gets us away from dependence on Russian gas in the case of Germany. You get the idea. So I think this is a monstrous change that is coming here, and I think the price is starting to reflect that, and the earnings of these smaller miners are going to explode if this spot price does what it looks like it wants to do. And I've been here before, so my long-term viewers and listeners, I've beat this drum pretty hard. Bottom line is, here's a link please go to the show notes and look at the link. And this is January 25th, 2020, almost 3 years ago, the top 10 reasons I invested in uranium. And I think they're just even more valid because time has progressed and more of these fundamentals are falling into place. So take a look at that. I'm going to be talking about this more going forward. I just read another article that has really piqued my interest. So I'm bullish on uranium. I'm not vague. I'm as subtle as a 2x4. URNJ is the first vehicle that I'm using this for. And do your own homework. I'm not a financial advisor. I don't know your financial situation, but take a look at URNJ and the uranium story and give me feedback, because I miss things, but I'm pretty good at this. And we more than doubled our money here before. And because I have a sell discipline, we sold it very dispassionately and avoided basically 2 years of declines and dead money. And now we're getting ready to have a fresh move up. And I think it's going to be a lot of fun. And you can go to cocktail parties and talk about uranium and no one knows what the hell you're talking about. But when they look at a chart at URNJ, it's going to be kind of cool. So that's my rant. I'm obviously kind of juiced up about that. AC/DC and several cups of coffee will do that to me on the drive up here to beautiful Studio 21 in Salem, New Hampshire, otherwise known as God's country. Please do me a favor. Go to my website, stockmarketauthority.com. Sign up for my free newsletter where I have sort of breaking news that happens in between these shows about things like this. There's the welcome video shows you how to sell, which I listen to all the podcasts. People don't talk about selling. and it's as important, if not more, than buying. I know how to do it. I've been doing it for 25, 30 years. I've studied this extensively. I've talked about it here, and I want to make sure that you lock in profits and minimize losses. So, and do me another favor. If you enjoyed this show and get value out of it, do me a favor, go to the phone, click on the share button. I think your friends will think it's cool that you get turned on to this money-making podcast. And that's today's top story. Now it's time to check the mailbag.
Incoming! There's a letter in your mailbox.
You got mail.
Christy's been working on a trigger finger. And this is from Professor Van Levy from Houston. And this is one of the fun things. There's a lot of fun things about the show. But the fact that I've got people that, in the case of Van, he's a sell-side analyst. Has forgotten more about energy than I know, frankly. And he would come and say, Bakes, look at this company. And I would look at the chart. And I'd either say, hey, the chart stinks, I'm not going to talk to you. I was a little bit better than that. Or there's something going on here, and let's do the fundamentals. I always did fundamental work. I just used the charts to dictate where I spend my time to interview CEOs and CFOs. And I'm going to talk more about that because I've got a pretty good methodology that I've worked over the years to flesh out promising new opportunities. So Van asks from Houston, he teaches at the University of Houston, can you do a technical workup on Schlumberger and EOG? I'm going to do one chart here, Schlumberger, and Van will talk about EOG on the newsletter and in my TikTok and Twitter posts and what have you. But Schlumberger first of all, it looks better to me. So Schlumberger is like the energy service blue chip. It's like the big institutions, if they say, hey, I got to have some exposure to energy services, Schlumberger comes off the shelf readily. I'm fascinated. This is why I like technical analysis so much. 4372 is support that's been tested. It was resistance 2 years ago, almost to the penny. 4372. So look at this line that I've drawn here, and this arrow to the far left. So there's memory in the market where 4372 was a ceiling resistance before, and then you break above that, and now it's become support after all the craziness that's gone on in the world over the last 2 years. And that goes back to March of 22, by the way. Here's what I see. I see the 200-day moving up, which means the trend is up long-term for Schlumberger. That's just math. So I like seeing the 200-day going up. That's that arrow you see here on the far left, the top arrow. And the volume is I think going the wrong way. It looks like it picks up on the down days and recedes on the up days. That's the exact opposite of what I want to see in a bullish chart. The relative strength is 53, which means, literally it's in the middle. I don't see a hell of a lot going on here. Again, it is the blue chip of energy service. And I think it's just this simple. You need oil to get, out of the 60s through the 70s into the 80s for, number one, the business to get better and for the market to care. Because right now, they're saying, what's going on with AI and Google and Oracle and what have you? And, if you're a portfolio manager and this is 5% of your index, you kind of say, I'll stay at 3 or 4. I don't need to go find new ideas like Schlumberger. That's what I think. So beware of dead money, everybody, but especially Van. And EOG looks worse to me than Schlumberger. The services look better than the producers, the exploration and production companies. So if this starts to get above 52 in a convincing way, then I'm more interested. And that's only a couple points, maybe $3. And then you have something going on, especially if the volume confirms it. So right now, I would say it's sort of my self-discipline kicked in. I wouldn't own this right now, but I'll keep it on my voluminous list of things that I observe, and if things perk up, I will let you know. And I hope that's helpful, and let's keep the conversation going. Roger from Van's class in Houston asked about how does Palo Alto Networks PANW look to you? It's entering the S&P 500. You also asked about SoFi. I'll cover that during the course of the week. But here's the chart of Palo Alto. Yes, it's going into the S&P 500, but the stock jumps when that happens. So, the actual going into the S&P 500 is discounted. I don't think you get much juice out of that. But this is clearly a positive chart. And look at this arrow that I drew down here on the bottom right. Earnings momentum is accelerating, which means that the year-over-year earnings growth is going from, and my eyes are so bad I can't read this here, but 10 to 20 to 30 to 40%, whatever the numbers are. Earnings momentum is accelerating, and there's a lot of classic Can Slim, William O'Neill, may he rest in peace, devotees out there that build them into their MarketSmith system, which provides the charts that I have here, which I'm a huge fan of. And that will get this into, and already probably has shown up into new systems of let's go look at Palo Alto. You have a new relative strength high, which is this next line that I've drawn here at 92 is the relative strength. It blew through $200 recent resistance on the earnings call, which is wonderful. And I have this sort of guideline where I'd like to buy things within 10% of the breakout. That's obviously 220. We're north of that, so I'd prefer to have this come in and buy it lower if it's on a low volume pullback. But it's a bull market. This is a positive chart. And yes, it's expensive, but stocks can get more expensive. And so I like this. It's extended 220 and under. I'm more interested, and I think you should be too. And again, I'll talk about SoFi. But welcome again. Really appreciate all the conversations we're having via email and other social media. Jack from New York, my son. What do you think about Lowe's, L-O-W? And this is interesting because, I've been kind of negative on housing, and I think maybe wrong on housing, but there is, this is undeniable. Look at these arrows that I have here on the volume part of the chart and the price action. The big up volume happens on the earnings report. So they clearly surprise people to the upside, and nowadays it's more important about what you say in terms of forward guidance. What are you going to do in revenues and earnings for the rest of the year, the next quarter? And the market clearly liked that. The relative strength is 71 and improving, getting better. 223 is this big line that I show here, resistance. And I mentioned this to both of you, Roger and Van. If you're producing reports for public consumption, sometimes, I don't think anybody's ever done this. I've talked to a lot of my friends on the sell side. Can you do all the research, all the fundamental research, have it in the can, and then when the timing is right, that means Bake says the chart looks good, you pull it out, put the new price on, and then unleash it to your research director, your clients, your student-managed investment fund audience, and have the money working almost immediately as the technicals meet the fundamentals, or better yet, the fundamentals meet the technicals. So just a thought I had. They have a new rural strategy that seems to be very, very promising, and we'll see how that unfolds. It's the number 2 name in homes, HOMZ, the ETF that I look at a lot, that has almost everything to do with housing in it, from Home Depot and Lowe's to the home builders, Toll and D.R. Horton, to Masco Plumbing to Sherwin-Williams Paint, you get the idea. And it's starting to look better. And so the conventional wisdom has been interest rates go up, mortgage goes up, housing stinks, and it just isn't working out that way. So I'm always listening to the market and paying homage. John from Philly, I will get to your LXRX and JPEQ either during the week or on the show, and I saw that on the drive up here, so I apologize for not putting that in yesterday. That's it for the mailbag this week. If you want to write into the show with any questions or comments, email me at bakes@stockmarketauthority.com. Even better, leave me a voice recording, and we can play your question on the show. Let's take a break. When we come back, we'll take a look at the Stock Market Authority portfolio, and I'll give you this week's Bakes Takes.
Do you want to become a better investor? Do you want to learn how to make money in both up and down markets? Then you need to go to stockmarketauthority.com and sign up for our free newsletter today. Stock Market Authority is run by award-winning investment manager Kevin Bakes Baker. His aim is to save you time while teaching you how to be a better investor. Bakes saves you time by diving into all the latest stock market news and information so that you don't have to. He reads all the latest articles, analyzes the charts, and listens to all the relevant podcasts. And then once a week, he gives you a breakdown of what's happening in the market. Stock Market Authority is constantly outperforming the S&P and the HFRX. Bakes is going to share with you his weekly stock observations. He'll give you concise insights and show you how to lock in profits and minimize losses. Stock Market Authority is making money in up and down markets. Wouldn't you like to do the same? So join now and let Bakes show you how. Head on over to stockmarketauthority.com and sign up for our free newsletter today. That's stockmarketauthority.com, making money in up and down markets.
We are back, and today we've been talking about buying uranium again. Bakes is going nuclear again. But now it's time for the Stock Market Authority portfolio. And I put my money where my mouth is, folks. And here's what we own right now. We own 9 ETFs. Our performance since inception has been very good. We're up 2.37 times the hedge funds index that I think is the most relevant because we go short like we did last year. We make money every year so far. We've got work to do this year, but we made money last year when the market was down substantially, especially technology and Cathie Wood and what have you. And so far, so good. Where we are right now, we're 10% in cash. We're 10% in Argentina, 40% in AI, robotics, machine learning, what have you. We're 20% in platinum and gold, and we're down 13%. We've got work to do. We're almost January 2nd. All the things that were pummeled last year have ripped, and we got out of the way of those. And our self-discipline was useful, but it's imperfect. So we've got work to do. It's June. I'm working my tail off, and I've got 6 months here, and I've got new ideas like uranium that I think are really going to help. And for sharp-eyed observers of the show, you realize that springtime for Bitcoin is over, and it just didn't work. Bitcoin in particular went up. It was very promising right when the Silicon Valley Bank failure occurred. And it was calling into question the banking system. First Republic followed was the next failure to occur. And it might be the Gensler attack on Coinbase or what have you. Binance US looks like it's on life support. I don't care. I saw it down 15%, and I took a Grayscale Bitcoin Trust behind the barn, and I shot it. So could I revisit this? Yes, but the bank failure cascading to Bitcoin enthusiasm simply did not work out, and I'm gone. And it happens, and I just want to lose a little money along the way, wait for 1 or 2 big winners to make up for that. And frankly, I haven't found that yet. but I'm looking like crazy. So Bitcoin's gone, uranium's in, and we'll talk about that. And I'll go through recent improvements in my newsletter and social media posts. Please subscribe, follow, and share. And that's how we're invested on June 14th. Let's get into this week's Bakes Takes. And my takes were prompted by Jack's friend Charlie from New York asking me, is the Fed done hiking? And my answer is probably not, but I don't think it matters. And part of that was as I was putting the show together, the CPI numbers came out, the inflation numbers came out. And this chart here is the commodities that we've posted before. And commodities are down, especially the big ones, oil and copper and what have you. And inflation is now 4% year over year. That's way down from 9, and it's getting closer to 2, which is the arbitrary level the Fed has said they want forever. And so to use Gaia Diamond's term, I think they have air cover to not do anything here. They probably will. Today's Wednesday. The meeting's at 2, and there's going to be a lot of fur flying, from 2 to 3 as people parse every syllable of Chairman Powell's words today. I just see the stock market saying, you know what, and especially the bond market, rates aren't that high. They're not going north, and earnings are going north, so I'm going to bid these stocks up. And the market's really, really smart, and so I'm going to go along with it. And I'm not going to, it's the umpire, I'm not going to spit at his face and be Roberto Alomar. So I think that the Fed is likely done hiking, but I think you could see a quarter basis point either here or July, but I almost don't think it matters. I think the market has spoken, and it wants to go north. So those are my bakes takes for this week. As we close out today's show, I always like to end with some much-needed levity. Gary Gulman is one of my personal favorites. Saw him at the Comedy Cellar in New York, which I highly recommend. Both Gary Gulman and the Comedy Cellar is absolutely lights out. Please go to my website, stockmarketauthority.com. Sign up for my free newsletter. Reach out to me on my email, bakes@stockmarketauthority.com. I read everything. I read all the comments on social media, the good, the bad, the ugly. @BakesTakes_ is my Twitter handle. If you enjoyed the show, got value out of it, please click the share button in the upper right-hand corner. My boys are coming back in town. I wish I could play Thin Lizzy, but the lawyers put the kibosh on that. I hope everybody has a great... I'm going fishing with the boys on Saturday. Life is good. Happy Father's Day to you, Dad. And we will see you Sunday. And it is good to be alive in America. I hope you have a great week. Keep smiling. God bless. Bye now.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Café, the United Podcast Network, its partners, or affiliates.